Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're going to find some Tuesday trading opportunities. Still battling the cold weather here in Montana, so I got the jacket going and the hoodie going under that because it is pretty chilly. It's chilly in here. So it's good to see everybody back in the room. JC, good to see you. Tuku, always a pleasure. Cristiano, is it time to sell the U.S. 100? Potentially. We just got to wait and see exactly. I'm still on the fence. I mean, you're up about 1.39%, but yeah, this market's starting to feel a little bit toppy for today. We may have an opportunity to do a little bit of live tick scalping, so let's go ahead and get right out to price action. You can see this is my DOM. This is what I trade on. So real money trading, I'm up about 160 today. 3 trades, 2 winners and a losers. I truncated one of the winners unless we probably would be done for the day. Typically, the target's up around 35 points or 350. We just didn't quite get that just yet, and most of it. I'm not afraid of being cautious today. I think that today is not a bad day to be very careful. It's choppy out there. I'm watching just some absolutely horrible intraday ranges set up. This is a gold futures. One thing about gold futures, if you are going to be trading this contract, rollovers coming up, and we're already seeing some volume dilution between this February gold, and then we jump to April gold. Now that's a little unconventional. I'll cover that when it happens later in the week. Brian Barr, be good to see you, Brian. But this is sort of the game plan today. It's been very difficult to get any sort of entries at all. We had some sells down here right in this area, this choppy area that were very good. We were looking for a buy. I really wanted to buy in right there from 38% about, 15 minutes ago. Just didn't quite get the entry. But right now, we got a kill zone. I mean, this is my second range number of the day. This is where I sort of expect the market to top out at. And if we're fortunate enough to get that trade, we will be taking it live, and we're going to let it bleed a little bit. I'm going to let that one go for a few minutes and see exactly if we can get a nice, maybe a 10-tick pullback or maybe even a 20. But we'll wait and see. We're only up 160 on the day. So if it gives us 5 ticks straight away, we're trading 2 contracts, blocks of 2. That'd be a quick $100. I probably would take it and just walk and get ready for tomorrow's Fed day. So that right there is the premium trade on my board. There's a couple other trades that we're looking at that aren't really as good. And the other one is going to be WTI crude oil. This was very frustrating market today. It's important to just stick to your guns. Understand that when a market is slow, when it's slow, you got to say, listen, I have to be disciplined. I have to wait for my price. I have to try to get my price. If you don't get your price in a slow market, you're almost guaranteed to lose money. Mark Orb, good to see you. JC, where's the stream at? Uh-oh. Should be up. I'm up and rolling. Let me see right there. Yeah, I'm rolling, so it should be up and going, JC. In any case, what we're looking at now is we're looking at maybe a buy. Maybe we get an opportunity to bid down here, 72.61. That's sort of my first line in the sand, but nothing has happened in WTI over this U.S. session. So what I'm saying is this is sort of an ugly type of a scenario for me. I was really frustrated. I wanted that 38% sell at 73.46, and I was going at 73.45s. It goes to 44 and then rotates down by 30 pips. That was our 30 ticks. That's a big trade. That's about $600 you missed out on right there. But just remember, trading, when you're doing it well, it should be easy. When your numbers are coming into play, when your crossovers are working, when your indicators are working, when you're reading it well, it should be easy. And there is nothing about easy today. This is trench warfare. This is tough stuff. So if you're struggling today, you're not doing bad. You're not doing bad at all. Just remember to be patient. When those daily ranges tighten up and the market gets real choppy, you've got to be patient and get your levels, or else you're not going to be able to make your risk versus rewards work. And, long story short, it's a long-term loser. So definitely something to think about there if you're trading today. As far as where we're at, I got a question earlier today about the US 100. Is it time to sell it? Well, I mean, it could be time to sell it. It just depends on who you are and what your strategy is. If you look at this monthly chart, we had really a heavy buy recommendation on that dip, which is down at 20,264. That was one that we really wanted to get, and we didn't quite get it. Since then, we're up significantly. So I still would love to bid there. Ivy, good to see you, Ivy. I would absolutely love to bid that there. As far as I'm concerned, you're probably going to rotate a little bit higher and just from where we're at now. So the question was, and I believe, let's see who asked that one. Cristiano 19 said, "Hey, is it time to sell the US 100?" I'd say, well, let's go down to our daily and say, okay, where are we at on the daily? I would be very careful with this. And the reason why, you've got a little bit of a big gap down yesterday on the DeepSeek news, which to me didn't mean a whole heck of a lot. I know it shook the markets and it was the talking point, but think about it. Well, DeepSeek's out of China, right? It's a China AI model, and the idea is that it can deliver cheaper and faster and better than all the other AIs that we have, the open source AI, all that jazz, whatever. The bottom line is it's coming from China, right? Okay. Now, nothing wrong with that. Innovation can happen anywhere, but I will tell you almost for sure that there will be tariffs aimed at that, and they will make sure that that product is somehow contained. Under the Trump administration, it will be full protectionism, and that's exactly what you're seeing right now in the U.S. 100. Big-time panic sell-off, and then you got the retracement back up. Yeah, I've got it live, JC. I mean, it's up. It's up. I'm watching it. I'm watching the live stream right now. So if you don't see it, I guess head on over to YouTube. You could check it out over there at the How to Trade Com channel. In any case, if you were looking to sell this US 100, there's a couple of things I would be cognizant of. Number one would be yesterday's high. If, in fact, you wanted to sell, I would wait until we get right up into here and go down to my 30-minute chart, and I'd say, all right, what do we got on our 30? Clearly, you have an uptrend going. Intraday uptrend right there, 7:30 a.m. Boom, boom. There's your pullback, and now we're riding high. So right there, bang, bang, boom, boom, pullback, and then there's the roll. So where are we going? You're still very, very bullish here. So if, in fact, you wanted to make that trade and you wanted to say, okay, I want to sell, I want to sell, I want to sell, you've got to have some evidence. Now, we know that what we can do with the US 100, we have all sorts of different ways that we can trade this thing. Let's take it down to our 9 EMA strategy, and let's see exactly what this one says. I would recommend a 30-minute time frame. I really would, as far as trying to get involved with a little bit of meaning here. I would definitely be going right down to my 30. I want to see my 30-minute. Where are we at? 9 EMA, there's your 20. We're not quite in overbought territory just yet on that 30-minute chart, so I'd be very careful there. If you're going to try to pick this top, remember there's a key event coming right now in about, I don't know, an hour, about 2 hours from now, and that's Power Hour. And you're going to see volumes pick up in the U.S. equities indices. So right now you are in overbought territory on the 5 minute. So you could be looking for a sell in this U.S. 100 if, in fact, the 9 crosses under the 20. Just be very, 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 very careful. Just be very careful. And don't let this one run against you. Don't let this one run against you. Looks like we might get a little action on our gold trade. I'm watching that one out of the corner of my eye. That's for sure. Yeah, we got about another 20 ticks, but we may get there. In any case, right here, you can see that you're going higher, higher, higher. That's great. We're in overbought territory. We're on a sell. 5-minute chart. If, in fact, you got a sell signal, say in the next 90 minutes, by about 12:30 my time, 2:30 p.m. Eastern, I would say you can go ahead and execute it, because what that's going to do is that's going to give you a nice swing high to base your trade off of. It's going to give you a signal going into Power Hour. So if, in fact, the traders come in late in the day and they kick the market higher, you're not going to get destroyed because you're going to have a stop-loss location. So that's the first thing that I would say. That's the first thing that I would say. So definitely want to be careful with this. If you're going to take this short, you're going to need a strategy for it. And right now, this isn't a bad strategy, but the timing has to be right. Be very careful shorting these stocks right now. I know it's choppy and I know it's ugly, but it's not necessarily the time to be a hero, especially when everybody's buying back what was a formidable dip yesterday. It felt like a retail washout, guys. It felt like a retail long side washout. So you're definitely going to want to buckle up and get ready for anything during Power Hour today. Who knows what's coming? All right, remember, if you want to trade any of these products, you head on over to Switch Markets. Your futures contracts are going to be a little different. I'm covering futures today, but you're going to want to see exactly which one of those CFD products mirrors the underlying futures. So, like, let's say for U.S. oil, CFD, that's going to be a CFD based on WTI, and I believe the product on Switch Markets MT4 is WTI. I believe it is. And like the US 100 we just looked at, that's going to be US Tech. Now the pricing is going to be a little bit different because of spreads and because of market lag and all that jazz. It's going to be a little bit different. Here's where you can definitely understand market structure, though. The market structure should be roughly the same. So be careful. Don't end up trading the US 500 when we're doing US 100 analysis or anything like that. So, all right, let's do a quick trade idea, trade follow-up. We put one out earlier today. I'm fairly confident that this number is going to come into play relatively soon. We've got 2 big events tomorrow. We've got the Fed's going to speak. We're going to preview that in a minute. And then we've also got really a key BOC meeting, Bank of Canada meeting, where they're also going to announce their interest rates. The Euro-CAD, remember, the ECB is going to announce their interest rate decision on Thursday. So this pair is probably going to come into play. The only reason I would put this out there right now as a trade idea is, number one, it's high risk. It's high risk, but also, well, it's not necessarily high risk. We know exactly where we're going to get out of the market at. But we also know that there's a very good chance that this level is going to come into play. So right now, if you haven't seen that Euro-CAD, go ahead and check the trade out. you'll notice a couple of things. Number one, you've got a pretty good situation here with what I would say is a real strong level. And you've got a weekly chart, spike low, spike high, pullback, 149.59. And I believe our happy number is 149.65-ish, somewhere right above that zone. Remember, our entries are shaded because we don't want to miss out on the move. So right now, we're trading right around 150 even, which is an absolutely fantastic big round number, and one of those areas that we've got to keep a close eye on. If we do extend past that, I do believe we're going to get a test of that zone and then rotate right back up to that key level. I think it's a strong trade. I think you got an opportunity there to win, and that's going to be your daily trade idea. Now, as far as what we have out there, we've got several trade ideas that are in the mix. And the performance, here's the performance metrics. It's been pretty good. I mean, this US 30 looks to me like we're going to go to all-time highs, so that's probably going to be non-elected. The Aussie CAD, we've still got that low is in play, and then we've also got the Aussie USD. We just missed that short by a few pips last week. That one was frustrating, but that's the way it is when you trade horizontal support and resistance zones. Sometimes you miss your levels, sometimes you just don't get them. So right there, we didn't quite get our Aussie USD short. That would have been bang. That was a bang. That was a good trade. In any case, you've got resistance in view for the Euro USD. That's our trade of the week. I'm going to talk about that one in a second. US 100, we showed you that big key macro level, and the Euro CAD. So all those trades are still in play, but we've had a pretty good run thus far in January, and I'm looking for a big close. Just remember, anytime you've got a central bank speaking, like the United States Federal Reserve, literally anything can happen, so be very careful with your risk. Euro USD, this was the trade of the week that we put out on Forex Signals TV. If you haven't seen it, head on over there, give it a click, and check it out. It's only about a 3-minute video. Those are going to be short and sweet and to the point. This right here, 38%, about 105.73. That's our key level. That's our key resistance zone. We're looking for a test of that zone potentially, and then rotation back down. Right now, we're beneath that, about 140 pips. The market's come off pretty big since we put that trade idea out, and that's unfortunate. We had a legitimate chance at getting that early in the week before the big reversal. Now, tomorrow, I would leave this thing in play. I mean, you've got the Fed coming in. You know we're going to get movement on the Fed. You know we're going to get movement on the ECB on Thursday. There's a decent chance that we still get this trade. This is what I would call an anchor point. Long-term anchor points, I like to use those as trading entry and exits. I think that's a pretty darn good level, 105.75-ish. I want to get in front of that in case we get a test of that zone, and then we get a retracement. So I'm excited for that trade. I think that it could definitely go, even though we're only about 140 pips off of entry, somewhere in there. I still think we got a shot. And if we got a shot, you're saying there's a chance. You're saying there's a chance. All right. But I'm interested definitely in that Euro USD. As far as what we're looking at for tomorrow, though, we've got some key events, and we've got one pair in particular that's going to be definitely on fire, and we're going to go ahead and highlight that, and that's going to be the loonie. Right now we're sort of watching the crude oil market with bated breath. Nothing's happening. Very difficult to trade crude oil today. We've got to see a late-day break, or you really can't do anything. In any case, week 4, it's already week 4. We're wrapping up January already. I'm confident everybody's January has been fantastic. But today, durable goods and consumer confidence, those were the big numbers. We're going to recap those in a second. Tomorrow's the BOC and the Fed announcements, and that is going to be an absolute red letter day for the dollar CAD, and we're going to go ahead and break that one down for you now. You can see Tuesday, Wednesday, Thursday, it's time to trade. However, if you were ever going to back off of this strategy and maybe be careful, it would be tomorrow. Tomorrow's Fed meeting is going to be an absolute banger. We just don't know what Jay Powell's going to say. I got a feeling that there's going to be some conflict, and he's going to be, I won't say talking smack to Trump, but there's going to be an active dialogue. There's going to be a lot of questions about tariffs, a lot of questions about Trump, and we've got to wait and see. Again, I know I keep saying that, but it's the truth. We don't know how Powell's going to react under this type of scrutiny. They're supposed to hold interest rates static. We will wait and see. I think the forward guidance is going to be everything. We're supposed to hold at 4.5%. The forward guidance is going to be everything, because if the Fed says and Jay Powell says we're backing off of those rate cut commitments for 2025, then there's a problem. That could definitely hinder the markets, and it could definitely establish maybe a bit of a ceiling going into Q2. So we're watching this one closely. First Fed meeting of the year is always a light show. I'm interested to see what Jay Powell says exactly. Now, the BOC, on that side of the ledger, you've got an expected rate cut. You expect the interest rates to come down to 3% from 3.25. That's interesting because we know that there's tariffs coming into play. We just don't really know when. That is sort of what's going on between the United States and Canada. An incredible an incredible period of negotiations between a tough Trump administration that was tough. They were tough on Canada the last time he was in there, and they're putting the screws to him right now. The fascinating part about the BOC and Canada in general is that we heard that the PM up there was going to step down. Trudeau was going to step down. And since then, they've made moves to really mitigate Parliament's ability to vote him out, and the guy's still there. A lot going on in Canada, a lot going on right now in the world. And so when we take a look at this, do we expect a rate cut? I fully expect a rate cut. I expect a rate cut and a dovish BOC, and the idea is to try to ward off a deep recession that could be, and try to get out in front of some tariffs that may be coming their way, especially towards the energy sector. So we're watching the BOC closely. It wouldn't shock me if they cut by a half point. Now is the time we're going to start seeing some crazy stuff happen, and all of it's in response to the new administration and potentially new tariffs and things like that coming across the board. Now, interest rate announcements. Here you go. That is what the Bank of Canada has done over the past 3 years. Hike, 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 hike. Static, 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 cut, cut, cut. Compare that to the Fed. Boom, boom, boom. Flatlined for quite a long time. And now we're coming down. I think that your next period, that's from about July for about, a year, something like that. They held them high, somewhere in there. I think you're going to see something like that again, right around 4%. We're watching that relatively closely. As far as what are we looking at right now? Well, I mean, I love long-term numbers, especially when we're going into key economic events. That's the idea about being a hybrid trader. You know what's going to move the market. You know how you're going to trade it. You fall back on your technicals. That's what I say. You wait till the bullets start flying. You fall back behind the sandbags. You get ready to go on offense. That's what it's all about. And to me, my anchor points give me a pretty good opportunity to potentially grab a trade or two and actually steal maybe the end of a range, meaning catch the edge of a range. That's what we're trying to do in intraday gold right now. It's just not quite coming our way. We're trading 27.68 too. We're looking for 71.4s, so we're still about 30 pips off of that, 30 ticks off of that. We could get it though. We really could get it here in the next 15 minutes. We just got to wait and see. In any case, right there, pullback zone, 140. Clearly 141 is going to be fantastic. That's fantasy land. We're never going to get that tomorrow, but we may get it later. We may get it in February. Absolutely. Now, as far as what are we doing right here on the daily, chopping sideways? Take a look at this. I mean, right there, you've sort of got a two-way range that developed back on the 20th and the 21st of January, bang, bang, and we are just flatlining in between that zone. So you could definitely, if you're an order block trader and you like smart money concepts and believe, potentially that these swing lows have a lot of meaning, those are liquidity sweeps. I hear a lot of people talking liquidity sweeps. Maybe they are, maybe they aren't. They sure look like it when you take a big daily range, nice runner, bang, nice runner, just knocking out all the retail longs, and then everything just rallies. A lot of folks don't believe in stop hunting. They don't believe in it. They say, Shane, it doesn't exist. You're crazy. You're a conspiracy nut. And I go, well, maybe. Maybe. Problem with conspiracies is they're eventually proven true, it seems like. So what do you have right here? Giant candle knocked out all the retail longs, and bang, what did you have here? Giant candle knocked out all the retail shorts. This is a mess. You want to be long here. You want to be long because crude oil eventually will come down this year, maybe. Maybe. If it does, it's going to really position the dollar to make big gains against the loonie to the top side. But we're cutting interest rates. We've got tariffs coming in. This pair right here is going to be one of the most embattled pairs on the board by far, bar none. And I think we're going to get some great trading opportunities. So if we know that a market's going to be moving, right now we're in deep consolidation. What can we really do to sort of improve our chances of making a little bit of money? Well, I mean, the answer is relatively simple. We just look at our technicals, we get our anchor points, and build a plan. So the low right there is 39.26. That's going to be my spike low. I'm going right up to last week's high, and then you can see your 38% right where those liquidity sweeps were. It's not a coincidence, really. I mean, this one was a coincidence. This one would have been a different Fibonacci sequence. It would have been something like that. It would have been even better right in front of 38%. But this last one, I mean, that's a really challenging week right there. That's the first week Trump's in office. That's all about tariff talk. Look at that. I mean, that's a crazy range. Right now we're rotating sideways. So if, in fact, we do get that pullback, I'd be very careful at being short. 142.87, about 100 pips away. That's not bad entry. That's not bad entry for the dollar CAD tomorrow. We'll be watching that one relatively closely. If, in fact, we see a real tight range develop tomorrow, I think we're going to have a pretty good rotational trading plan going into the late week. So don't be surprised if you see the dollar CAD on our daily trade ideas coming your way here in a day or two. All right. Any other markets you guys want to cover? I'm more than happy to do that. As far as what we think can really happen here today, I'm not impressed. I'm not impressed with a lot of things. Right here, this YM. This is a good look at my. This is a good look at my E-mini Dow charts. I do trade the E-mini Dow. A couple of things that I would be fixated on if I was watching. This is the US 30. I'll pull the US 30 chart here in a second. But right there's your all-time highs. Okay, I still believe that the short side of the market's the way to be. Still, though, you can't ignore the last 3 weeks of price action in the US 30. It's been absolutely outstanding. So we're looking at this double top up here, 45.6 and a quarter, probably a pretty good area maybe to take a short. Right now we're right around 45 even. So what I'm looking for is I'm looking for a top to develop in here, and then an opportunity to get our pullback buy. I would much rather run with the current instead of swim against it. It doesn't really matter what I believe is going to happen over the coming year or 12 months. I think we're going to trade down significantly just because we're going to have some growing pains, tariffs, Fed policy, all of the above. It's going to be a challenge to trade this stuff. Now, do we get a chance to buy a pullback like this? I would love it. I don't know that we get that 1,100 points. Maybe tomorrow, this top right here. But what do I want to do? I want to get active. I was active earlier in this market and didn't really pan out too well. Took a small loss. Probably should have just held the market and been okay to the top side, but that's all right. Spike low, spike high, pullback, 38%. Okay, 44.7 and a quarter. Definitely something that we need to be thinking about going into tomorrow's session. Let's go right to our 30-minute chart. I mean, we're just right there, opening bell, ding, ding, and then there's your B period break, C period, D period pullback. So you sort of had an A, B, C up, and then a D washout, washed out all your retail longs, and now you're going long again. So if I was seriously considering, okay, I want to trade right now, late day, always high risk. We start getting into 5-minute charts and 1-minute charts. It's always high risk. So you can see right here, there was the massive sell-off. I actually got chopped, I believe, right in here. I bought this pullback somewhere right in this zone. It was right around, it was 45. It was like 45.05, something like that. What was the low there? 40. Nah, it wasn't that one. Or it was 45.13, something like that. You could see I was on the right side of it, but this candle right here got pretty crazy, and I was like, I better watch it after a doji. So I cut that one off short, but this one still went up and got the money. The real question is what do we do now? Man, it's really tough. I mean, you could say buy it. I mean, US 30, you'll notice that the price action's the same. The prices are just a little different. You could say buy it, but where do you buy it at? It's a challenge. I think I would be on the sidelines here. I would be very, very careful with these equities markets today. I know they're up, and I know it looks like a bullish trend, kind of, but it's not. It's rotation. It's rotation, rotation. It shouldn't be anybody's surprise that your high today is, 44,976. Sellers dug in right in front of 45,000. So if, in fact, you were trading the US 30 and looking to scalp, 45,000 right there is not a bad area to do it. Let's just go ahead. Well, we don't need to do that. Let's go ahead and see okay, so we got a 2-pip spread. So we got a 2-pip spread. It's doable to scalp it. You could scalp right in front of 45. So what would I be thinking about as an entry? Be pretty conservative. It'd be like 44.9, 44.9, maybe 94, something like that. That would be my sell. And the idea is that this 45 area is going to get a little bit of action, a little bit of two-way action, and we're just going to look for a vibration of maybe 10 pips to the downside, take the money and move on. It looks like a trend. It's not a trend. You're up 0.4% here. It's not really a trend. All right, guys, let's see. Emmanuel, good to see you. Good evening. How are you? I've been busy at work lately, and I'm going now. I'm on the night shift. We'll enjoy the night shift, Emmanuel. There's nothing wrong with going to work. Believe me, trading and working, always supplement your income with trading first until you have enough money to do it full-time, but there's nothing wrong with working a full-time job and trading. You can do it. A lot of folks do it. You just got to build your day around what you want to get accomplished in the markets. Let me see. GDP USD. Yeah, Ben, GDP is going to be on Thursday. I'm thinking you meant Great Britain pound. I think. Let's go ahead and get the Great Britain pound USD going here. All right, 30-minute chart. I mean, that is just bowling shoe ugly right there. That's what I always say, bowling shoe ugly. That's a flat market. So, like, if you were serious about trading today, Great Britain pound USD, one strategy that's not bad. Let's see. Let's go ahead and open a layout here. It's the Piranha. Piranha's not bad for flat markets. I don't know if anybody remembers how to do the Piranha. It's a strategy video in in our catalog here at How to Trade. But Piranha is just a basic price action strategy. And right here, you would be short. So let's go ahead to the trading panel, and I'll go ahead and execute this Piranha trade for you live. The reason why we would do this is because the market's flat. So if I'm going to go ahead, let's go with a sell market order. Okay, what do we want for a take profit and a stop loss? Remember, the Piranha is a sort of a real tough trade. It's tough to make it go long term. You've got to be very good at understanding when to get in on it. So right there, we sold. That's not really good enough entry. You're going to need to be as close as you can be right up on that upper Bollinger Band. But if you enter a market order with a 4x pair, you're gonna get the worst end of the stick with the spreads every time. And I mean every time. Universal, good to see you. So this would be a trade right here where we would be short and we would be looking for a 50 cents or 50 to win one. I would probably juice this way up, but probably a 10-fold or 100-fold. I'd risk probably $100 to win 50 on this trade. But the idea is simple. On the Piranha, 5-minute Great Britain Pound USD chart, Bollinger Bands, you're going to set them to 12 off the SMA with a standard deviation of 2. All right, that's absolutely key. And what the idea is you're going to get into flat markets, and you're going to look to take a 5-tick profit while risking 10. Now, the idea here is real simple. You've got to win a lot of trades. You've got to win a lot of trades, and I mean a lot of trades. You need to be hitting 70% of these things, 75% of these things to make this strategy go, because when you lose, you're getting wiped out with a tune of about 10 pips. Now, this trade right here, I don't know. It's not necessarily bad if you want to take a look at really what's happened. 5-minute chart also, I forgot to mention that 5-minute chart. If you want to really look at what's happened today, you would have had a bid right there. I mean, just going back an hour, you would have had a bid right there. Probably would have got paid off right there. And then you would have came down here, had another bid. That one wasn't bad. Then you would have had a sell there. And then you would have had a sell here. And now we're working another sell. So interesting strategy. It's one that when you see a Great Britain Pound USD chart like this, you say, yeah, it's flat. Now, it's not going to be flat tomorrow. This thing's going to be all over the place. You're going to see big-time moves from all the Forex majors. I would bet on it. Jay Powell's, it's going to be a big deal. Now, the question for us right now is, okay, how do we trade a flat market? The Piranha is a pretty good way to do it. A pretty good way to do it, especially for the Great Britain Pound USD. Risking 5, you get those parameters set the way that you need to have them set. You risk 5 ticks, you're risking 10. We're looking to make 5. Do we get our profit target filled? Maybe, maybe not. But the idea here is that the market is just going to keep trading sideways, and we're going to make money from that rotation. That's all there is to it. That's not a hard strategy at all. As far as what I would be looking to do here on the Great Britain Pound USD, go right to a 4-hour, and you can see just how tight we really are. Extremely tight. Right there, sort of a spike high, but now we're just trading sideways between the 13-period EMA and the Bollinger midpoint. I don't want any part of that. Let's see if we can find a better level. There's got to be a better level. Okay, here's a daily chart. Looks to me like we've already missed our trade, but that's okay. Right there from this spike low to that spike high, you're going to be doing the Fibonacci dance, and it looks like it worked perfectly. Pretty much. Well, not really. I mean, 34, what was your follow-through down there to 14? So you took about a 20-pip draw. You're looking to get this to rotate back up into this range to get paid. Personally, I think that the bullish way is probably the best. If you wanted to go ahead and just send them long from here, you probably could. Just be sure to stop yourself out. And if, in fact, you were to take this long, it would be a trade that you want to have hit its take profit, and you want to have it hit its take profit here realistically before we get into tomorrow's session. So you want to get this one later today and maybe into that Tokyo Open. All right, universal rate cut coming. What to expect? I expect nothing. I don't expect a rate cut. No, we're not going to see a rate cut tomorrow. I think you're going to see the interest rates be held firm. They're going to be held firm, and potentially we're going to be in a situation where I expect hawkish dialogue from Jay Powell. I really do. I think that he's going to put Trump on notice. I think he's going to put the markets on notice that, yeah, our interest rates may be staying higher than we expected last fall. I expect bearish action. But remember, big-time key event, it doesn't matter. It doesn't matter what the number is. You're going to see the markets go absolutely crazy. And when they do, we could fall back on our technicals and trade them. We're going to do some live trading tomorrow on very short time frames. Remember, we got 2 streams tomorrow. We got the 10-minute strategy blitz. That's going to be in the How to Trade trading room, or it's going to be on Forex Signals TV. And then later in the day, we're going to have FOMC live. I'll have Jay Powell's presser for you live. We always like to do those, cover what Jerome Powell, the powerful Jerome Powell, has to say, and what exactly we can maybe expect from some of his verbiage. All right, everybody. Here was our tick scalping opportunity. We're still not there. I love it, though. I'm going to be sitting on this gold trade probably for the next hour or so. After that, I'll pull it. Maybe an hour and a half going into power hour. If we do get that rally up there to 71, I have no problem selling that with a lot of confidence. As far as our WTI trade, I mean, nothing is happening. This market is dead, and I mean dead. So we've got to be, just patient. I'm looking at 72.61s as being probably the bottom today. Do I want to short right now? No, I'm not interested. We had a chance to short back there and just didn't get it. Decent day, not the best. Up 160, nowhere near my daily target, but, we'll walk away positive today one way or another. All right, everybody, have a fantastic trading session. We're back twice tomorrow, so be sure to tune in. FOMC Live is the big one, though, so feel free to swing by the trading room, ask me any questions you like. Also, check out our YouTube channel, How to Trade Calm. It's got a bunch of new strategy videos on there, and pick one you like and go get them. All right, everybody, that's a wrap for today. Trade the action well, and we'll talk soon. See ya.